So that's the first approach. And again, that's all based on the realized cap. There we're looking at the proportion by age bands. Now, what we're going to do is go through a very, very similar exercise, except I mentioned at the start about cost basis models. And where your cost basis is typically what drives investor behavior. Because why? Well, profit and loss is what drives markets. People, generally speaking, come into these assets, they buy and they sell because they see some kind of profit or loss. If you see your coins go into a profit, you're more likely to hold them, but eventually people like to take those profits. Likewise, there's only so much of a drawdown that people can handle. It's only the price insensitive hodlers that actually make it to the other side of a bear market. So you'll all obviously be familiar with our short-term, long-term, and realized cap. These are the cost bases for long-term holders, short-term holders, and the market by and large. Now in purple, this basically highlights when the spot price is below all three of them, meaning it really doesn't matter when you came into this market. You're essentially underwater on your position. Now, one thing I really want to highlight here, we're going to focus on this purple zone. Note that the short-term holder cost basis, which typically trades much higher than both of them, tends to descend below both towards that late stage bear. What this is actually telling you is that these long-term holders who weathered all the volatility, they made it all the way to the other side of the bear, they reached their long-term holder status, and they still underperformed the guy who bought yesterday. That is a really, really brutal reality of the Bitcoin market. This is what these 75% drawdowns, people buy all the way up and all the way down, and their cost basis gets higher and higher until those people who actually had the patience to wait until the final capitulation level, which again, on-chain data helps us identify, we can start to see that this is where these floors get put in. Now remember, the short-term holders who are actually buying down here, we covered this back in January, I believe. These are actually long-term holders by definition of who they are as a person. To have the high conviction to buy when FTX had blown up and Bitcoin was dead for 10 years, yes, they're a short-term holder because their coins recently transacted, but think about the level of conviction you need to have to be this person. So down here at these cycle lows, even though they are a short-term holder by technical definition because their coins recently moved, we can layer on our analyst perspective and go, well, what kind of properties would this investor have to have? A fairly robust case for why you want to own Bitcoin is probably one of them. So again, we can look at these from a technical perspective, but you can always overlay that analytical perspective just to add that extra color. So really at the bottom of a bear market is really that only time when the short-term holders are actually some of the highest conviction in the market. And we are now starting to move into this realm where that is less true. We've now got speculators who've seen the market rally pretty much 100% since the lows and has been tussling around this $28,000 level ever since. Now, the last thing I just want to touch on, kind of an adjacent point, we are in the process as we speak of retesting the short-term holder cost basis from the undersides at about 28,000. So that is a key psychological level to pay attention to. If we get above and hold that $28,000 level, those short-term holders who've been underwater for a couple of weeks since, in early September or late August, they are now back into profit on average. And that could potentially be a strong indicator for market sentiment. A rejection from there obviously would tell us the inverse.